tomorrow morning. You're going to be downtown at the NYC, 9:30, ringing the opening bell. Omeed, I just learned it's your fourth time doing so.
Right.
This SPAC is for an online gun retailer, GrabAGun, but there's been a tremendous amount of demand for this. What do you think is driving that?
Well, I think it's an extension of our thesis that Don and I started, 5 years ago, which was using various mechanisms in finance to try to push back against overreach we saw in the private sector, mostly at the behest of ESG and DEI mandates. What's happened is, through those mandates, private companies that control a lot of the economy have starved certain industries of financing. You guys obviously know that that's happened in fossil fuels with some of the mandates we've seen with public companies, but it has also negatively impacted guns and ammunition. So we used a SPAC to take a company called GrabAGun public in furtherance of the Second Amendment, and the people have overwhelmingly supported it. This is now, having just closed a few minutes ago, one of the most successful SPAC transactions in history. We received 0 redemptions from trust, meaning the company will receive from our team tomorrow, when we ring the bell, over $170 million in proceeds.
Wow, when this was first introduced, I read it was actually only just at $100 million. Obviously, this is politically controversial. You're talking about an online gun company being really direct access to the consumer. Are there safety concerns in this, Don?
No, I mean, that's the big misnomer. They say you're not getting a gun to your doorstep. You're still going through federal firearms license dealers, but we're also...
To go physically pick it up.
To go physically pick it up. That's where you run your background checks again, and they like to pretend there's not such a thing, but it actually is very real and it's very regulated. But this is the way that regular people are buying. Throughout the crime of the last few years that you've seen, women are now entering the gun market. The experience of going to your local gun shop, it may be fine for me. When I walk in, it's, hey, Don, how's it going? If you're a first-time gun buyer, if you're a female, if you're someone that's young, that's an uncomfortable experience in many cases. So GrabAGun allows you to do that the way you'd buy everything else, like you would on Amazon if you're buying home decor or other goods. And so we're bringing the experience that they're shopping with everything else to the regular consumer, and it's been incredible. And so it's a company with real revenue. They're doing $100 million a year, real profit, and, you know, pretty kind of cool to take a gun company public on the New York Stock Exchange. That's not something that I imagine many people would have envisioned a while ago, but there has been that big pushback from a big portion of the country that says we weren't able to do these things. We were debanked, we were de-insured, we were de-everythinged for so long. So our whole thesis was to give a big portion of the country what they've been looking for and to free up and really democratize the capital markets.
And you've given them a slice of that. Of course, there's still going to be a lot of big institutions that will say, okay, we don't want to actually invest in a gun company of any form. And I know that the whole thesis behind 1789 and some of the other projects you two have been working on is designed to sort of provide an avenue for those areas outside of just firearms. What else are you looking at, Don?
Well, we've obviously mentioned some of the companies that we're invested in. Again, a contrarian approach, but something that, again, a vast majority of the country, or at least a solid portion of the country, really wants to engage in. We took another company public 2 years ago called Public Square. Again, an online retailer for people to buy American-made goods and to support the countries that they love. That's sort of morphed also into now a payments processor, since so many of the transactions that you saw for, you know, conservative or right-leaning type of goods were basically debanked. I've had businesses that I've started actually get debanked by getting a letter, hey, by the way, there's no more money in your bank account. We have a cashier's check in the mail. We just don't want to do business with you. Not because we were doing anything else, but because we didn't go with the mandates of whatever it was of politically correct policy at the time. And so many Americans felt left by the wayside that we said, hey, this is a pretty solid market. If we can cater to half the country, that whether it directly or they just know it's a potential, we're going to be left by the wayside. That's a solid business to be in.
Another company in the industry that kind of falls into that category is what we were seeing with Polymarket and some of these prediction market firms. And of course, they just won a reprieve today, a couple of investigations that have now formally been dropped. You're an investor in that. Obviously, you have a connection to the Trump administration. I am curious as to whether you think we're going to see more progress in the prediction space, not only with Polymarket, but with Kalshi and some of these other things, to operate more freely in the way that those founders have articulated.
So yeah, let me answer that in kind of a way to also summarize our overall investment thesis. So he talked a lot about the response companies, this parallel economy. That's what we've been using our SPACs for. 1789's mandate is even broader than that. It will include some of that. We have, for example, invested in Substack, which is a free speech platform, you know, protecting the First Amendment. But we also go into several other areas. One is areas that are going to enhance the security and prosperity of the United States. So think defense tech or the reindustrialization of the United States. The third is the area that we talked a little bit about, areas that have been underserved, fossil fuels, guns, that we see an arbitrage opportunity in. And then finally, where you're starting to pick up on with Polymarket, areas where I think the government or certain incumbents have failed miserably. That's the reason we got into BlinkRx, which reduces drug prices. It's an area of the market where the government has failed to reduce pricing, and we find this is a disruptor. SpaceX falls into that category as well. NASA failed, and SpaceX took the mandate. Polymarket falls into that, in that people lost faith with pollsters. They were constantly just paid off and hired mercenaries. And what Polymarket has shown is that you can basically take the markets to try to predict what the truth is. And because people are going to put their money behind what they really think, it's the same thing you see with using markets in finance in order to predict things. You can do that now with polling around politics and other issues as well. So the last thing I'd say about Polymarket is it also announced that from Founders Fund, they're going to have over $1 billion valuation, which we like because that marks up our investment 3 times.
Well, they've been accurate. They've been right. Okay, I've been in politics, at least the game peripherally now, for a decade. And how many times? I mean, we saw it the week before the election. You know, Kamala Harris is going to win Iowa. It's like that? I don't know, man. I was in Iowa a couple days ago. I don't think that's going to actually happen. You know, they were able to get that. So they saw the way these markets and some of these traditional sort of political institutions have been able to be weaponized for the benefit of the establishment. And they've gone against it. They've proven to be right, and that's a solid investment.
Well, on that point, Don, and we certainly saw that in the presidential election. We also saw that at the local level here in New York with the kind of the surprise victory of Zohran Mamdani in the mayoral primary. And I know there are a lot of folks, particularly in finance and real estate, who are wringing their hands over the prospect of Mayor Mamdani. But I am curious as to what you think of not so much him, but about the sort of groundswell of support that he got, particularly from a lot of young people in this city, and what they're asking for out of their mayor or potential mayor.
Listen, I think it's going to create a serious problem for New York. I don't remember what the exact stats are today, but I remember 8 years ago when I was getting ready to leave New York myself as a political refugee to the free state of Florida from the People's Republic here in New York City.
It's not that bad.
It is if you were me. It is if you're me. And you're dragged in front of every court and you're sued for all these. I'm the first person in the history of the world to get sued for paying back a loan on time with interest, just so we're clear. I get it, it's a little bit different, but I think at the time it was something like 18,000 people in New York City paid 84% of the tax. Those people are mobile. They can move wherever they want. So as a real estate holder in New York, I guess it sucks for me. As a real estate holder in Palm Beach, it's going to be incredible because those people are going to move. They're very mobile. They've had enough. They understand what's going on. And they're not going to continue to subsidize the nonsense that hasn't changed anything. We've seen these promises before. It hasn't worked. It didn't work when they promised communism in Europe. It didn't work in the Soviet Union. Certainly hasn't worked anywhere else that it's been tried in the world. It's created more poverty than any institution imaginable. And it's sad to see literally the home of the free market, the home of capitalism, New York City, take this sharp turn to the left. And I don't think it's going to work out well. And I think people understand that. It's a little troubling watching Andrew Cuomo now try to come in as this sort of third-party candidate. And just so we're clear, we probably didn't get along that well for the last decade, but my first political fundraiser in history was for Andrew Cuomo because I was a real estate guy in this city. And he was the attorney general, so he signs off on your offering plan. So Don, I know him well, but this is going to split a vote.
At the New York Stock Exchange, why didn't you guys wait to maybe go to the new Texas exchange, if that's how you feel about New York?
Well, because we're here now. I think that'll be a place that will take companies public in the future, but we're here now. And I think for us and for our thesis to be able to ring the bell of the New York Stock Exchange taking a gun company public is sort of an ultimate vindication in what we've been talking about all along. I mean, again, there's not a time in modern history where you think that's going to actually happen. So, this is our thesis really, manifesting itself. Like, we're back, we're going to do these things, and we're going to fight for the freedoms that Americans love and deserve.
But politics is on a 4-year cycle. How do you do that when you look at 2028? You're investing where you say conservative values, anti-ESG, you call it MAGA, Make America Grow Again. What do you think about, say, there's a changing of the guard in Washington in 4 years?
When did Fox News do the best?
I'm guessing
during Obama's 2 years, 2 terms. So we have an all-weather strategy. Either we're the loyal opposition, or like we are now, we've been vindicated culturally and politically with what we've been saying. Ultimately, I don't think this is partisan. I believe we represent the majority of the country, actually. And I think there was a period of time where it lost its way. And we were doing something that I think is actually totally capitalistic. We're simply providing people with choice. ESG's been around in earnest since 2010 and became a multi-trillion-dollar asset class. And at the same time, when you map out their returns, they fail to deliver, and that's just the facts. Why isn't there a fund out there like ours who's providing an alternative for people to invest in?
Fair point, but do you worry at all that your strategy, EIG or whatever you're calling it, ends up being the next ESG, where it's basically just sort of a niche instrument for a niche group of people and maybe it doesn't deliver?
I don't, because if you look at the principles of what that acronym stands for, entrepreneurship, innovation, and growth, it's everything Don was just lamenting about New York City, which is to say that this was the place that capitalism are supposed to be universal values. It's one of the things, if you have a country like America, is supposed to be our unifying ideology, is capitalism. And it does give me hope that tomorrow the New York Stock Exchange, which has been great, by the way, as a partner, is welcoming us to basically do a ticker under the letters PEW, Pew, tomorrow.
A little takeoff on pew pew, like shooting a gun, but it's also important. I think the last 4 years taught Americans a lot of things, right? They became unafraid to speak up about things that were obviously insane, things that went too far. You see that manifesting itself right now, in so many cultural issues. The trans women in ladies' sports, men playing in women's sports, people who were afraid to voice those opinions about how asinine a concept like that was just a few years ago are now, these are 90-10 issues. We're taking the 90. So we're okay with that competition if it just means that everyone's actually thinking rationally. We're fine with that. If we're the catalyst for that change, we're good with that, because that's what's good for the country and that's what's good for America.
Speaking of voicing of opinion, you have a big stake in XAI. Obviously, there's been some tension with the former First Buddy. Has that changed how you view that company, and even maybe more so in the financials? We've reported that they are burning through a tremendous amount of capital every single month. You still want to maintain that investment?
By the way, actually, yes. One of the worst publicly traded companies of all time was Twitter before Elon Musk took it over and made it profitable. So I'm long on Elon. Our fund is. We're invested in every one of his companies. We're invested in X, which was Twitter, XAI separately. Now they've merged, which is also a brilliant play, because the feedstock that these AI companies he now has in-house with a platform that has over 600 million users. It's genius. The competitors don't have that. We're also invested in Neuralink as well. So we think the Elon index, if you will, is something that's here to stay, and the companies are demonstrating their success independent of whatever personal issue may happen, which obviously he and I want to get resolved and move on in a positive fashion.
Do you have a personal relationship with Elon?
Of course.
Yeah, we do.
It's still healthy despite...
the reality is, hey, there's going to be political differences. The political world is different than the world in which you often function with, that creates a lot of other tensions. I mean, I love Elon as an innovator. I mean, he's got, without question, one of the top innovators of this century, perhaps ever. And so, him focusing on those things, I think, is very positive. So we've always been able to maintain that relationship. I think that comes back. Again, politics is a very different game. I learned that one the hard way 8 years ago. People create obstacles. They create headaches that aren't real. They aren't.
You are making it, because look, just a few months ago in February, SpaceX was valued at $350 billion. They just did an oversubscribed round for $400 billion a few months later. This is constantly happening in every single one of his portfolios. There's reports out there that XII, which was at 50 or 60 billion less than a year ago, is going to be at 200 billion. So the private markets and markets generally are speaking, and they still love the portfolio.
When it comes to politics, though, it is in our financial markets now. Policy in Washington constantly drives what's going on. People are glued to Truth Social to understand what potential the next tariff rate is. Don, I want to get your sense, given the fact that you are the president's son. I asked your dad once about the Trump put, if it exists in the market. Is there a threshold he's unwilling to maintain when it comes to either whether it's tariff policy or something else because of what is going on in the financial markets? And he once talked about the bond market getting yippy. Do you think a Trump put exists?
I don't think so. I think the reality is he's one of the few people in politics who's willing to play the long game. We don't do that, right? We have very short-term cycles. People make bad decisions today to get a quick result tomorrow that is, disastrous for us in 50 years down the line. He's the guy that's willing to say the things that need to be said today, who's willing to take some of that heat now to be able to have the end result that's beneficial for the country in the future. That's what he's done very consistently. You saw that even a couple of weeks ago. S&P's down 5. Oh my God, it's the Trump crash. Well, what happened when it hit all-time highs? Last Thursday? What happens when it recovered 10 days later after that? He gets credit for the negative, but he doesn't get credit for the positive. The reality is these things manifest themselves over time. We've become an instant gratification society. He's one of the few people that's actually a decision maker that is playing the long game and doing so for the benefit of the country.
You nod your head. I want to give you the last word, but I also just wanted you to just at least touch on some of the other two big political issues going on right now, the legislation on crypto and the potential freeing of Fannie and Freddie. Where does that stand?
Well, yeah, I'm on the board of Fannie Mae, and that was something that I wanted to be able to serve the country. I'm excited about making sure that those institutions stay in a great spot, and see how I can work with Commissioner Pulte, Secretary Besson, and Secretary Lutnick to improve upon them. And that's what my role is, given my experience as an attorney and capital markets professional and investor. That's why I did that. As far as crypto legislation, next week, we're excited about that. That's going to be another signature piece of legislation the president's going to pass right after the big, beautiful bill. And I think that's going to be something we needed and brings crypto out of the shadows as it was in the previous administration. And it's something, or another reason why the president had that industry support.
Crypto is going to be the future of finance.
Yeah.
Okay. We were doing everything imaginable in the prior administration to send that to other places. People want to be in America. They want to invest in America. They want that stability. What they needed is some guide rails. They needed a framework in which they could work, even for us in the crypto platforms that we were developing, whether it was American Bitcoin, whether it's World Liberty Financial. We didn't get into that because we knew all that much about crypto. We got into it out of necessity because we were getting debanked. There wasn't a person in this city that I couldn't call and get a loan for a real estate project a few short years ago. Then we became Politica, and all of a sudden you're persona non grata. So crypto's the future. To be able to have the legislation to create those guardrails, to be able to keep that industry, this is going to be a multi-trillion-dollar industry, and it should be based here in America. America should get the tax benefits of all of that. They should have the innovation, the growth. That's strategic thinking, and so I'm super excited about that bill because I think it's going to really make sure that America is the home of crypto and blockchain technology for the future.